Welcome back to the Automotive Market Minute, in which may or may not take just over a minute. My name is Steven Turgella.
My name is Philip Trebetowski.
And I'm James Sivko.
Well, everyone, if you were looking for an Automotive Market Minute in which hits a myriad of different topics, especially a market sell-off that we have not seen in quite some time, as well as manufacturers having to scramble all over the place to figure out how they're going to respond to tariffs, the consumer being extremely worried and unstable, and two brainiacs here to explain what the hell is going on, you have tuned into the right Market Minute. So we're going to talk about the tax returns and how a lot of sales were pulled forward into the month of March. So March was an absolute heater. We're going to cover that. We're going to talk about the tariffs by brand. So we're going to give you key elements as to how manufacturers are currently being affected and how they're responding, which is even more important. We'll talk about our national dealership performance, of course, the death of an economic series, which will be presented by Mr. James Sivko, and then with this market sell-off, what exactly is coming next? Why are we doing it? And we'll have some incredible insights coming from Brainiac James Sivko and, of course, Mr. Phil Trebetowski. Let's get into it. Go ahead there, James.
Well, let's not lose perspective here. It is still tax return season. This is a quick graph along the bottom. We have the day of the year, and we've got this year in orange, last year in blue, and a 10-year median in green. And look, there's still $250 billion out there of consumer tax returns to go get and to convert into sales. But how good is this year? Well, let's take a look at that. If we look at our rank versus the last 10 years, this year is about an 8 out of the last 10. That's about as strong as you can get because that includes these 2 COVID years where the Treasury was just handing out money hand over fist.
Tariffs are impacting a number of manufacturers. Let's take a look at how domestic brands have been responding to this news about tariffs. If we look at Stellantis, units being built in April are still protected under the February pricing agreements, so don't expect any increases in prices in the month of April. We have seen some plants be idled in Mexico and Canada, and we've seen Stellantis and Ford come out with employee pricing on eligible vehicles. Ford, with employee pricing, is actually cutting prices on most vehicles. And GM, we're starting to see them ramp up some production at U.S. factories. In terms of a more general announcement from GM, they said, talk to us at the end of the month at the upcoming earnings call here at the end of April.
Something that I was touching on earlier during our pre-brief. One thing that's very important, we should remember, and James, I realize you could expand on this much more than me, but for my simple mind, remember, it's normal for the consumer to react and panic very quickly, right? That's what the consumer does. But what I really liked about that GM response there is talk to us at the end of the month. It's like, hello, everybody. Every one of these factories is doing the same darn thing. They don't know what the hell is going to happen next. They're just taking the information that's in front of them and trying to make the best decision. And we're kind of like looking at it going, well, they should know. It's like, well, no, they shouldn't. They have no clue who's going to come to the table, meaning these other countries, when they're going to actually get a deal done, why, what the numbers will look like, etc. You'll see that Mercedes announced, what was it, yesterday or a couple days ago?
This week.
They were going to absorb all of the tariff costs for 2025 models. So the analogy that I used earlier is this. We're seeing this as some big chess move. Fine. It's a pawn. It's not a rook. It's not a knight. It's not a queen. It's a pawn. And it looks amazing. Look at the choice of words, indefinitely. So James is heading up Mercedes-Benz. He says, you know what we can do to stabilize all of our customers right now and make sure we keep moving product? We're going to take care of it in the short term. Boom. We're going to use the choice of words indefinitely. That's the same damn thing GM's doing. It's just not as sexy. It's like they're not technically taking care of possible implications to the customer. Now, they're different, of course, than Mercedes is. Totally different where they're made, the price structure, how much they're getting hit for. I get it. But we're seeing these manufacturers making these moves, and I think Mercedes did a really good job making this chess move in which a lot of people perceive it as being, like I said, a rook or a knight or even a queen. It was really just a pawn.
I wanted to go through kind of brand by brand because we really have been seeing a bit of a mixed bag in terms of responses from different manufacturers. Like Steve, you just mentioned, Mercedes is absorbing costs for all 2025 models indefinitely. BMW said that they're holding prices steady through May, but June pricing is going to be announced on April 22nd. Nissan has actually went the opposite way. They're cutting prices on the 25 Rogue and Pathfinder by roughly $1,000. Hyundai, they cut a deal to invest a total of 21 billion US dollars in the US from 25 to 28. They've been adamant that they're not going to increase prices. Honda not raising prices, but Volkswagen, a little bit different. Dealers can expect added import fees as early as mid-April. Toyota has mentioned they'll be covering higher costs tied to tariffs. Jaguar Land Rover said no price increases in April or May, but vehicles are being held for 4 weeks in the UK. Porsche is going to be passing through price increases. Volvo, they're making some plant shifts. Audi, they have halted shipments arriving at ports after April 2nd. Over 37,000 vehicles are actually going to be unaffected. And then if we look at Infinity, they're pausing production until further notice, and more updates are expected later on in April. So again, very much of a mixed bag. We're seeing some manufacturers absorbing costs. We're seeing some manufacturers like Nissan trying to cut costs. And then obviously like Volkswagen, we are seeing some manufacturers go the opposite way and passing on some of those fees ultimately to the consumer.
James is going to go through some of the details about the history of tariffs and how we've gotten to this situation. So I strongly urge you to stick around to the end to hear the way he's going to break down what's happened over the last 50 years. So just keep that in mind. For now, I'm going to go over the national dealership performance. So let's look at this. More traffic, more leads, more appointments, and then boom, new sales, used sales, massive. We had multiple dealerships set all-time records. And here was the really interesting thing. Grosses were fire last month. We had small dealerships that did 35 units, and they're sitting there going, I did 200 grand in gross. I did 250 grand in gross. And it's like, man, if you're a dealer that does 30 units and does 200 grand in gross, happier to pig and shit. And so it's important to realize that what is seen as such a massive negative when you look at the market sell-off, let's go back and let's look at what automotive dealers just had happen in the month of March. How are we not even like considering the fact that this is a monumental shift so far? And now the question would be to the dealers, did I just take my future sales? Did I pull them into March? Am I about to go through hell? Well, what you guys can do, Mr. or Mrs. Dealers, you could choose to save that money. You could choose to batten down the hatches and be as conservative as possible. But here's the deal. I'm not hearing that April started out real quiet. I'm hearing that April's starting out pretty solid so far. You could say that maybe we're taking all these last units that aren't going to get hit, and we keep buying to get ahead of it. But as of right now, I'm seeing a pretty good response in general from the factories, the ones that are the Porsches of the world. Porsche's searching for a fuck to give, and they cannot find one. Like brands like that, you see it, and it's like, yeah, and like the guy that's going to pay $275,000 is going to pay $300,000. We don't care.
I think we may see this trend, and I'll go to the next slide here. This is new and used retail sales over the last couple of years, and you can see normally towards the tail end of Q1, we see a normal but strong seasonal pattern. This year, 2025, is above each of the last 3 previous years. We've had a fantastic Q1. New sales up 8% year over year. Used sales up 9% year over year. To your point, Steve, I think we may see this continue in April, potentially in May as well, because the units that are sitting on the ground right now are not impacted by tariffs. And so if anyone is on the verge of buying a car, much like James Sivko, or leasing a vehicle, now is the time. So dealers should really be pushing that sense of urgency to make the most of these non-tariff vehicles. Because again, it looks like there is still some uncertainty about, by different manufacturer, what is inventory and pricing going to look like 2-3 months on later on in the year.
Guys, I want you to look at used day supply. Look at that blue. Oh my God.
New day supply is now 10% lower than 2024. It's sitting at 71.5 days. So now think about that. All these vehicles that are now coming into the States are being tariffed, but there is a 72 day supply currently on the lots right now. Used is down about 1.2% against last year. It's tighter than it's ever been, especially over the last 3 years at this current point. And We've talked about this on previous market minutes. Given how low and how tight the used vehicle market is, now with the expectation that new vehicles are going to be increasing in prices, what are we seeing happen to used vehicle prices? They're increasing as well. The auctions have been through the roof lately, very, very competitive. Vehicles are going well over book values. We're seeing used vehicle prices surge right now, much like we hinted back in January.
Could we see dealers play a little bit of the COVID game here? Meaning, hey guys, so Volkswagen, we know that Volkswagen is going to end up passing on these tariffs to these fees to you, the dealer. And then the dealer's like, well, just to let you guys know, we've got 100 left in stock here that don't have these tariffs. And later on, you're about to get $3,000. The factory's going to charge us $3,000, which means I have to charge you $3,000. So I wanted to let you know that this $26,240 car, we're not doing any negotiations on it. Now, all of a sudden, on those vehicles that they have left, that they may be making $2,200 per copy, now they're going to make $4,000 per copy. They're going to hold gross on all the new vehicles that are left in stock that do not have these implications.
Dealers should be playing the volume game now and trying to hold gross. And then after the tariff impact hits, they should be playing a price game and should put some kind of an invoice fee on the sticker if they can, and put the consumer in a place where the consumer has to start to try to negotiate that away.
I feel like gross is going to be really strong in the short term because there's only so many that, and again, it'll depend on brand, but there's only so many that won't have implications. And so right now, there's a little bit of leverage on the dealer side going, oh, my vehicles right now, they look cheap.
I don't believe we'll see vehicles start to go for over sticker, but so many vehicles left. Why would you discount them if you know your incoming inventory is going to be much more expensive?
The University of Michigan has been a very, very important economic series, especially in the auto space. They ask a lot of auto-specific questions about consumer buying intentions and why the buying decision is or isn't being made. A lot of it grosses up into one of many economic series. This one is consumer expectations. I'll let you all figure out who is in the blue line and who is in the red line here. But this was a great economic series until just a few months ago, where folks that are in these different camps have just started pressing a political button. And so now we don't really know what consumer expectations are through the University of Michigan lens. I think a lot of survey data is starting to land this way. If somebody's politically unhappy, they're just going to give bad answers to a survey. And so we've got to maybe start to look at hard data. It just provides less clarity going forward. And if you look at the next slide here, this is inflation expectations as well. Inflation is probably the most politically sensitive topic right now. And so you're seeing the blue camp scream that there's much more inflation than there is, and the red camp maybe putting their heads in the sand a little bit. And if you look at the next slide, poof, now we've got some kind of a crazy number here. This came out well before the tariffs. So we'll see if the tariffs pile on here, but it's sad to see the University of Michigan and their 50-year data series just kind of die here. Maybe folks will start to behave again soon enough and start to give rational answers so that we can figure out what consumer expectations really are.
What the hell is happening with this market sell-off? And then most importantly, what's been happening over the last 50 years to get us to this position in which it really looks like we're trying to play the bad guy? But my question to you is, what if we've just been getting beat up on the whole time? What if we've been getting bullied? What if we've been the compassionate people next door? What if we were there helping end world wars, and yet we're over here making bad trade deals?
I'll just go through a brief timeline of how we've ended up here. The S&P is down about 20% from all-time highs. We've seen drops like this a number of times, but this one happened very rapidly. It's kind of expected with February and March options expiration. And for anyone who is unaware of that, think of that as like a spring cleaning for the market. That then led into Liberation Day on April 2nd. Tariffs were expected, but the amounts were uncertain. And the tariffs that were released, which we will show in a second, were significant. Almost like think worst case scenario. That caused the market to panic. That caused the market to fall. Now, in the past week, we've seen 70 countries have started to negotiate with the US, many of them looking to strike a 0-0 deal, free trade deal. But we have seen China start to retaliate, and that is now escalating between US imposes a tariff, China retaliates, the US is retaliating. that is causing a lot of the uncertainty and some of this downward pressure in the market. Now, more downside may certainly be in store, but also we've seen countries start to approach the US now trying to strike a deal, offering things that they would have never offered in the past because of the tariffs that were announced. So we do expect that we may see some renewed strength here in the coming weeks, but there certainly may be more downside. No one has a crystal ball. No one knows exactly what the market is going to do. There certainly could be more downside. We will just kind of have to wait and see. It looks like as of right now, James, I don't know if you want to take this at all, but the Atlanta Fed is also now projecting negative GDP for Q1. So who knows if are we in a recession right now? Is one coming? No one knows. Most of the times, by the time it actually is declared, there's a good chance that the bottom is already in.
I know that the subject matter expert is about to speak about it, so I want to start with the common man's opinion here. All I see from my standpoint, and I discussed this with Phil in the gym this morning, it's like we look at China. Okay, we're looking at this situation, all right? We imported $440 billion from them. Remember, when I come to these calls, I come with this simple information. I'm a 1+1 type guy. I'm not sitting there using macros in Excel. I'm not doing all that stuff. I leave that to the brainiacs. I just try to do back of envelope. That's my life. I look and I see $440 billion is what we're bringing in from China. They're only taking in $140 billion from us. It's 3-1. I'm sitting there going, well, why wouldn't I make sure that it's a fair deal across the board? And it's like everybody's looking and watching this battle go back and forth. You're standing up to the bully. Of course, when you stand up to the bully, there's going to be some turmoil. So for me, I watch these things happen. And James mentioned to me last week on the phone, James is like, Steven, what's most likely going to happen is these countries are going to come to the table and it's going to become more fair. And that's what we really want, is just fair. And I know that the market's going to go through pain in the short term and I'm watching it. But for me, it just seems like eventually what should be fair if we stand up for ourselves will be.
There were some giant average tariff rates that were outlined for countries. There were also some pretty measured responses. They just came out and said, look, if you've got 60% tariffs on us, we'll go halfway at 30. Well, the street was expecting something like 10% across the board. So what happened was you would see traders pausing their televisions and walking up to the television screen and staring at numbers that were mind-boggling to them. And there were some major trading partners next to those numbers, and there were some really giant numbers there. In the end, these numbers were all set at just about half of what all the countries had been tariffing us for a long time. And when I say a long time, I mean a really long time. This is a 70-year-old practice. It dates back to the end of World War II, and we were allowing countries to tariff us to be able to rebuild Europe and rebuild Asia and let countries rebuild themselves after World War II. We've had a bunch of trade representatives, employees of the US government, that basically gave away the store and gave away the store for decades and gave away the store so that they, at the end of their term, could sit on the boards of Nestle and Sony and all these other big global enterprises. That was the quid pro quo for giving away the store. I think a lot of Americans looked at some really eye-popping numbers from some really key trade partners and were asking themselves, why the hell are we only tariffing these people 1% back? So setting it at 50% of where these countries are, I think puts them all in a very bad and embarrassing position. And I'm not surprised, Phil, that a lot of them are already beating the path to the door of the Commerce Department and trying to renegotiate the tariffs that they have. And I would not be surprised if we see over the next few months scores of 0-0 deals with these trade partners. Many of these countries expressed surprise that they were allowed to get away with this for as long as they had. In the end, it looks like the president and his commerce secretary has found the cheat and chisel in international trade, and the goal here is to get rid of it. We may see some short-term pain, but I think over the long term, I think American companies will be able to sell things in foreign countries again.
Many of these countries we helped save. We sacrificed a tremendous amount of American lives to be able to save. And then we wanted to help them rebuild, and we allowed them to have these big tariffs. And again, James, if I'm understanding all this correctly from reading and listening to you, it's like, that's a compassionate move, America. Very nice of you. Not saying we're not greedy capitalists, but also we seem to be pretty good people.
Yes.
What is currently going on I would say in many ways is unprecedented. And what I'm most excited about is over the next 30 days between now and when we release the next month's Automotive Market Minute, we are going to see the dust settle for a lot of auto manufacturers. We're going to see the dust settle for a lot of these reciprocal tariffs and where everything ends up. Is it going to be 0-0? It sounds like the goal is 0-0 with many countries. By the time that May hits, and we're talking about April, I'm very excited to see. There's all this speculation, but we'll finally have results at that point. And I have a pretty good feeling the world is not going to end, and the American people will be in a better position than they were as of April 9th when we're recording this. And so I'm very excited to see that. Now, I'm also confident to say with this many moving parts, the May Market Minute might just again be our most dynamic market minute. And so, on behalf of my esteemed colleagues, Mr. James Sivko and Phil Trebetowski, my name is Steven Georgella. Thank you again for a fantastic Automotive Market Minute. And God willing, we will see you again next month. See ya.